And hello everyone here. Thank you for coming to this webinar here with fxstreet.com. This is Chris Capre, of secondskyforex.com. And so today's class is being recorded today. It's on Ichimoku trading. And we're going to be covering some, finishing off on the topics we covered last week. And then we're going to be getting into some really good setups on both the euro and the pound. And then we're also going to take a look at some yen pairs at the end here. So I'm really excited. We got a lot of really good stuff in here. I'm bringing some of my Kumo analytics. I have a quantitative program that does analytics on Kumo breaks, and it measures for several different variables, and it's saying, hey, if these scenarios come up, where it's probably going to end up at. And so I'm kind of super excited to share that with you today. It's just kind of a teaser of some of the stuff that's available. And so let's go and get into this. Before we begin, I just want to see if there's anybody here that's new. And if there is, please go ahead and just raise your hand or let me know. Or just text and let me know. And also, feel free at any point in time to ask questions. It's what really makes the class more interactive. And so with that being said, excuse me, just in the headset here. With that being said, I want you all to feel open to participate in this class. So, okay, so what I want to cover for the beginning of this class is one of the most famous systems or signals inside the Ichimoku Cloud. The Ichimoku Cloud, if we look at it as a whole, it's generally designed to pick up trending and momentum type moves. But it's also very good at spotting reversals when things are really changing direction. And out of all the systems that it has, and there's well over 6 of them, the one that's most famous is also the one that's the easiest to use, and that is the Tenkan Keygen cross. This is the one that's been most popularized, most adapted, mostly because there hasn't been a lot of research done on the Ichimoku on an advanced level. So most people are only aware of this system. They don't even know that there are actually several other systems embedded inside the Ichimoku. Excuse me. So with that being said, I want to go over a recent signal that came out on the Tenkan Keygen cross on the pound US dollar and talk about it and show you how it played itself out. It's just a beautiful signal that came about. And so that's it. Now for those of you that are new, just a real brief, the Tenkan Keygen cross is very similar to a moving average crossover of sorts. It's a little bit different, but the basic concept is still the same. The Tenkan Keygen cross is simply referring to the 2 lines here. This white line is the Tenkan, and this is the Keygen. For those of you who are new, the Tenkan is very similar to a moving average, but not quite. It's like a price action line. And that was one of the things that Hosada, the guy who invented this, Koichi Hosada, he wanted the focus to come back to price action. So he basically created some lines that were kind of price action lines, and one of them is the Tenkan right here. It's known as the Tenkan-sen, which kind of translates into the turning line or the momentum line. And that's this white line right here. This red line here is the Keygen-sen, which generally stands for trend line. So it's monitoring the overall trend. And one of the basic signals for the Tenkan Keygen cross is when they cross over each other. General bullish signal is an upward cross, and a general downward cross is a bearish signal. But that's a generic version of it. There are many qualifiers built into them and into the Ichimoku system itself. And that would depend upon where the crossover happens in relationship to the crowd. Above it, inside it, below it, both downward crosses and both upward crosses have varying degrees of strength based on their position in the cloud. Now, I want to talk about a most recent signal that happened on this one here. So we're just going to start off by looking at the price action, and then we're going to look at a signal that formed just yesterday. So we see that the pound is dropping from about the 50 level here, and a pretty sharp move. It does have a nice little bounce back up here, but then it gets slammed back down with a very large series of red candles, dropping from just under 150 to 148, about a 200 pip drop. It forms a bottom here for a while. This is about 7 hours. 6 hours actually. And what it does is it touches down here several times. From here it then bounces and then makes a second attempt at the same low. But in this second attempt, it forms a higher low. And before it even made it down to the final bottom, it formed a reversal candle and pounced up pretty quickly. In that process, it formed another higher low and then broke out to the upside. So this price action formation would have cued us into a reversal in play here. Then, yesterday, after the pair starts on a very aggressive climb to open the London session, we're getting back to that 150 area. The pair starts to move a little bit sideways. Now, if you remember, the Keygen sen represents what is called trend line. So it generally contains the overall trend and the structure of that trend. If that trend is still in place, it will generally be held by the Keygen. And as we can see, once we really got above the Kumo here, this Keygen held it at several points along the way. Boom, boom, boom. And then after pushing up and making a new high, we came back to test it again. And a decent size sell. Not aggressive, but decent size. 4 out of 5 candles. And these are half-hour candles, so we're talking 2 out of 2.5 hours. It sold off and went right back to the Keygen. The Keygen at this point goes flat. So when the Keygen does that, that generally says, hey, the trend, there is no trend at this point. However, the previous trend was still in place, so we have to be paying more attention to that as the dominating theme instead of looking for a possible reversal. Now, what happens is price action continues to bounce off of this Keygen here, and which also matches up with this previous resistance here. From here, it continues to go sideways and again keeps testing this Keygen. Now, this is where it gets interesting. The price action kind of forms what is known as a pennant of sorts, which is generally considered a continuation signal. Continuation of what? Whatever the previous trend was. So we had a double bottom formation. Then we have a very aggressive move that's held by the Keygen. It doesn't break the Keygen, so the trend is still in place according to Ichimoku analysis. It then moves into a pennant formation, which also suggests Keygen or continuation signal of the original trend. Then after kind of nudging outside the Keygen here, we see that the thing starts to form a potential upward Keygen cross, Tenkan Keygen cross. We have an upward Tenkan Keygen cross forming after a double bottom formation, after the Keygen holding it for quite a long time, after a pennant formation, all suggesting more upside. And right there, on this little section here, is where we actually have the upward cross. I'll zoom into this a little bit. Now, traditional Tenkan Keygen cross traders would have taken this, not only because of the previous things that were supporting this, also because it's a crossover above the Kumo. It's an upward crossover above the Kumo. Upward crossovers above the Kumo are not only bullish signals, but they're strong bullish signals. Why is that? Because you're getting this bullish crossover above the Kumo, which represents support and resistance. And since we're above it, the Kumo is now support. So we've cleared through resistance, and the Kumo will no longer act as resistance. It will act as support, further bolstering the upside prospects for this. Well, what happens after that cross? The thing moves sideways for a little bit, and then it starts to drift above the Keygen again, and then it starts to drift above the Tenkan here. Once it does that, we see that the curvature starts to change. That's a very good sign for us. And then after retesting this top here, boom, it breaks through it with a gigantic candle. And this is late into the Tokyo session. So this was, basically the London, pushing it a little bit, moving sideways through New York, and then traders saying, okay, this thing's going to have higher ground, that's it. And so this happened late in the Tokyo session, not quite near where the Europeans are involved, but late. Many people, many price action traders, would have just traded this little signal right here and reversed it. That is a typical reversal signal here. But the problem is that the other price action didn't support it. The curvature of the price action was angling upward for a break, and the Ichimoku is saying, look, we're carrying this with the Tenkan line here. Now remember, Tenkan is momentum. That's what that line represents. So the momentum was curving up, suggesting this thing was going to go for a break. This is one of the things that's beautiful about the Ichimoku Cloud, is that a lot of people have a hard time getting in trends. And There's often this kind of theory or this belief that traders go through that, well, the trend's already started and I can see it started way back here or wherever that is. And so, it's too late for me to get in it, or it's much harder for me to get into it. Well, the Ichimoku offers a reprieve of that kind of mentality. The Tenkan Keygen cross is a trending type system, and one of the things it does is actually get you in the trend before you've cleared that kind of final hurdle of support or resistance. The crossover happened well over here, well before we had cleared the previous price action high. This is a very common thing with the Tenkan Keygen cross. It does a very good job at getting you in just before we eclipse that final price level. And so the beauty of it is also that it's a very clear signal in the sense of there really isn't too much doubt about what is a real legitimate Tenkan Keygen cross. And so it makes it very easy for us to just enter the market into that trending environment. A lot of you may want to wait till it clears resistance. That is totally your prerogative. But I would like to warn you ahead of time saying that, hey, you know what? If you were to look at a lot of the Tenkan Keygen crosses that are out there on multiple time frames, especially the strong signals, many of those signals happen before they clear that final hurdle of support or resistance. So don't be intimidated by them. Traditional price action support and resistance methodologies would say, no, you have to clear them first. And Ichimoku actually it takes a different approach to that. Because the bottom line is that those trends are actually forming. The order flow behind those trends are actually forming before it completes or pierces through that support and resistance. Why is that? Well, let's take something like a range of sorts. Ranges will stay as ranges until they become trends. What happens is, from an order flow standpoint, is let's say we have a range from here to here. Well, eventually the institutional traders will recognize it, and a range is really just a balance or an agreement between the buyers and sellers that there is a relative stability or agreement about the overall value of that currency. So, in a range, in this case, well, the institutionals are basically agreeing, hey, we feel the value for the pound dollar right now is between 49.56 and 50.10. And the sellers agree that this is a good value for them, and the buyers agree that this is a good value for them. And they kind of just recognize that agreement and play with that. They use it as a trading opportunity. Trends only exist when there is disagreement about the value or an imbalance of value. And what will happen in a range environment is that the sellers will, place the orders here, the buyers will place the orders here, and the pair will kind of pong off these little support and resistances until all of a sudden that balance starts to shift. It's not necessarily like the sellers kind of raise their flags up and say, hey, we're going to sell less this time. And the buyers say, hey, we're going to buy more this time. It just kind of reveals itself through the price action, through other techniques, via technical analysis. And so the institutional traders are very good at picking up these signals. What happens is that for a pair to break out of that range, the next time it tests that high, the order flow is in such a state that it's no longer, hey, 500 million short and 500 million long over here. All of a sudden, it goes from like the normal 500 million short to say like 200 million short or 100 million short. And the institutional traders, being able to recognize that, are able to sense, okay, you know what, the balance has shifted, the scale has shifted. It's no longer, 500 million short, it's 100. They're letting down their defenses. Maybe they're even exiting positions saying, hey, we ourselves as shorts are recognizing this isn't going to hold, so we have to get out now. And once that balance shifts, whoever's got the greater strength in the market will take control of the next move. So they're actually, from an order flow perspective, establishing that control before it breaks that support or resistance level. The breaking of that support or resistance level is just the final confirmation that that imbalance is now fully in effect or in play. There are sometimes additional confirmations, that's called a breakout retest, But the bottom line is, and that's usually the final confirmation, the absolute, hey, that's it. But from an order flow perspective, that balance or imbalance in the market was established before it cleared that support resistance. This is why the Tenkan Keygen cross is actually very good at that. It has this ability to pick up those imbalances before it clears that support or final support or resistance level. And so this gives you an option for people who want to get into trends, into trending plays. This is one of the beautiful systems for that. Okay, so with that being said, this one got you in it, and look what happened. This thing broke it, and after posting up at 50-50, look, we had the same trigger signal here that was back here. A lot of price action traders might have been shorting at that point, but the Ichimoku traders would have said, no way, we're not below the Tenkan yet, and we're ponging off of it as a support. So what does the market keep doing? It keeps climbing higher. And so Ichimoku traders would be staying in this entire time. Again, another potential price action signal that we wouldn't be reversing on. Ichimoku traders is saying, look, we still have yet to actually close below the Tenkan. So until we do that, we can't even consider shorting. Why? Because the price action is above the Tenkan, aka we're above the momentum line, meaning that the momentum is still strong. Okay, so we got a question here from Mike. Mike says, what settings do you use for the R line? The R line? Oh, for your line. Sorry, it broke up the sensor. Can you explain how the cloud affects your trading decision? I use the standard traditional settings for the Ichimoku Cloud. So it should be 9 for the Tenkan, should be 26 for the Keygen. It's all the standard traditional settings basically. They come that way in MT4. Most trading packages, don't adjust those settings or anything like that. So hopefully that answers your question about that. Can I explain how the cloud affects my trading? This is an interesting question to answer. And I'm going to take just a couple minutes to answer this here. This is a good question, Mike, so I'm glad you answered that. The cloud really doesn't necessarily affect my trading for a lot of reasons. Here's why. Because I'm a trader. I'm not really I'm not an analyst. I'm not paid to. I get paid every now and then, or hired by institutions to use my Ichimoku analysis or build analytical systems. But my job as a trader is not to spend a lot of time looking at the markets and charts and making decisions about where it's going to go. My job as a trader is to make trades that make money. And to do that, I don't put up different filters, a bunch of different filters, and then weigh all that evidence and make a decision. And so with that being said, I have systems that I use to trade the market. I'm a trader. And so to make trading decisions, I have built systems which have certain rules that basically say, look, if you have this qualification field, A, B, and C, hey, we take the trade. And inside that system is built the methodology for position sizing, for entry, stop, limit, take profit, everything, trailing stop. It's all built into the system. So the reason why I like to trade this way, this is what we call systematic trading. It's not total black box, because black box is just turning a system on and letting it run. But I basically just turn the system on when I see a setup coming, and then I let it make the trade. Or worst case scenario, it's what we call systematic discretion. In other words, or discretionary systematic trading, which means that I have a system to trade, say, Ichimoku Tenkan Keygen crosses on, say, the 5-minute time frame. And this particular system has all these rules to make these trading decisions. If I get all the rules met, there's a 95% chance I'm going to take that trade. If there is something that is way outside of the norm, aka that 5%, then I won't take the trade, but for the most part, I will take that trade. So in that sense, because that's where the majority of my trading is done, there isn't too much discretionary thinking about it. Discretionary thinking can cause, I'll put you in a position where you doubt yourself, where you really have to kind of weigh all these pros and cons, and you just end up going back and forth and go through this mental ping pong. And by that time, the trade's already gone, or, you're not really sure anymore. And I really don't enjoy going through that process. I found it's much more efficient to just make trading decisions and just go with it. I learn a lot better and I trade a lot better when I do that. I find it's much more efficient for people. It makes it mentally a lot more interesting, and it gets you a lot more committed in the market. So with that sense, because all my trading is done that way, the Ichimoku Cloud really doesn't affect my trading decision. However, I do have pure Ichimoku systems that the formation of the Ichimoku Cloud and the Tenkan Keygen and all those things can affect whether I fully pull the trigger on that signal or not. And so hopefully that answers your question. But if you want to be a fully discretional trader, and I'm not saying that my method is the best, but if you want to be a full discretional trader who puts all these filters and things on the chart, and then you look at them and they all kind of give you a thumbs up or thumbs down, Cisco and Ebert style, and then you kind of weigh all the thumbs up and thumbs down, well then there are ways to use the Ichimoku as an analytical tool. But I find that the more time you spend doing too much analysis, the less time you actually end up doing trading. And the more hesitation you'll have when it comes to trading. So hopefully that answers your question, Mike. It's an excellent question, though. Nakusi, sorry if I mispronounced it either. Which one is better, take the Advanced Ichimoku class or wait for my book? Well, my book, the next book that's coming out, won't have any information on the Ichimoku Cloud. That won't be for the follow-up book. And that's going to be well over a year out. So if you want to wait for my full, my Ichimoku book, which is going to be a while, you're welcome to do that. But, when it comes to learning and improving your trading, I don't waste time. I can't get time back. And so that's why I try and really maximize the amount of time I do to improve my trading and take it to the next level. So if that's the way you approach it, then I recommend just jumping in the course and, taking it. Otherwise you can wait a year, and supposedly save yourself some money, but you end up not getting the feedback or the interaction or anything like that you would with taking the class. So it's really up to you what is your flavor for that there. Okay, so here we are today. According to Ichimoku traders, just want to cap this one off, and then I want to go into two great setups. I might not have time to do both of them, so let's move forward into that. Ichimoku traders would still be staying in this. What would they do to possibly take profit on this one here? They might wait for the first strong close below the Tenkan. They might wait for, and that might be a little sip, like, they take part of the profit off the board. But a traditional Ichimoku trader would not be taking the whole position off the board just from the price action closing on the other side of the Tenkan. They would probably be waiting for a few other things. But for right now, they would still be long on this one here. And that's getting in way back around sub 150. So they're in, most Ichimoku traders that were watching this would be up well over 150 at this point. Now, I want to go into two other things that I have some analytics I want to share with you. And let's start off with the euro dollar. Okay, so here we are on euro dollar on the 1 hour time frame here. Can you all see this new chart here? Yes, no? Okay, great, thanks. Just want to make sure. Okay, actually, I should probably sub out, but what I'm going to do is, I just want you to take a brief look at this here. And I want to comment on a couple things. We got a very massive down move here, from 38 down to 34.50. Brief reprieve here, and then just another sell off from 35.50 down to sub 33. So 350 and then 250, or 350 pips and then 250 pips. Then a good move back up, and I apologize for the arrows. This is one of my systems and where it's getting me at. So I got short here, long, flipped back to short, and then got long back in here, and now I'm short again on the euro. So that's just one of my systems there, but don't pay attention to that. What it is here is, we had this very strong move, and we were below the Kumo for quite a long time. Once we got below it here at 3,700 on the 17th, we stayed below it until the 25th, actually going into Sunday of this week here. The market then bounced very, very strongly. And, we're talking off the lows of 32.50, 32.75, all the way up to 35, just shy of 35.50. Since then, the market has pulled back in a very interesting way. after this Kumo break here, which is a nice little run, the pair then posted 3 red, 2 little weak blue candles, and then now more likely a third red candle in a row. So this is suggesting that this pair might be reversing course a little bit. With that being said, I'd like to now go to some Kumo analytics here. Bones, are those arrows merely crosses of the red and white lines? Actually, if I go through each one, you'll see that they're not. Because, let's zoom in here. We'll start off real quick. This thing actually hasn't crossed. The red and white lines haven't crossed. According to the display data here, the TL, which is the white line, is 3478, and the ST is 3478. So, no, they haven't crossed here. On this one here, you can see the crossover, and it's got this little point here. This is before this crossover here. So, the answer is no. These arrows are actually from a separate system. Here's another one. Downward arrow before the crossover. Upward arrow before the two separate. Only on this one is it actually after the crossover. Again, these arrows are from another system that I use. What that system is, I'm not going to share that. That's only available to course members, but that's another system. So hopefully that clears that there. Okay, so, and Bill, I'll get to your question in just a moment here. Okay, so here we are. We have this very strong move. It's suggesting that this pair might be unwinding a little bit here. So with that, no apologies on that, Bill. No apologies at all. It's a good question. We'll get back to it in a little bit. So here we are. We're on the 1 hour time frame. This thing might perform a Kumo break here. If it does, it'll probably do it somewhere between here and here. Okay, if it were to continue to sell off strongly and create this type of Kumo break here and form a candle close below it, where would be our possible targets on this one here? Well, this is where my Kumo analytic program comes in. And hold on one second. I'm going to bring that in just a second. So I have this Kumo analytic program. It's basically a quantitative program that my programmer built. I have this really good program I'm very grateful for. And he basically built a program that will analyze Kumo breaks with 7 different filters or qualifiers. And what that does is, it's conditions like A through F, or I don't know what the 7th letter is. But the bottom line is it has those 7 conditions. And when it creates a Kumo break, or is potentially creating a future Kumo break, it will let me know what conditions are in place and what the average move is likely to be. Now here, I'm going to post this chart back, or the cam back up, and it should have an Excel sheet here. Let me know, not that one. Oops. That's the pound. Sorry about that. Okay, here we go, $1. Try to. Okay, so you should see a Excel sheet on the $1. It should say Kumo break analytics, $1, 1 hour. Okay, great. So this is performing the analytics, and with conditions A plus C plus D, this is the average pip move with these types of A plus C plus D. Now we're looking for a potential downward Kumo break. What conditions A plus C plus D are, I don't reveal that. But I will tell you that this thing is suggesting that if it does perform this Kumo break with these conditions in place, we will have a 113.2 pip move. Now, keep that number in mind, 113.2. Let's just round that to 113. Now I'm going to go to the chart on this $1 pair. And I want you to take a look at that. So now, if we were to break it between 133.86 and 134.04, where would 113 pips be? Well, let's do 113 pips from 33.86. That would be 32.73. How's that? 3 pips right there. So it's basically suggesting that this thing, if it does break within this range here and it fills conditions A plus C plus D or E or whatever that is, this thing will travel from here down to here. Ironically, that just happens to be exactly where the lows are. That's the power of Kumo Analytics when you learn how to do them. If it does it here at 34.04, well then we just add another, 17 pips. And here we are right around here. So we're just shy, well that would be 91. So here we are, right by this price action low here. So somewhere between 32.90 and 32.73 is where we'd probably be headed if we were to get this close in place. That's I love it when I get these types of setups because the analytical program, it's not monitoring, the highs and lows necessarily and keeping track of that. It is just monitoring these types of Kumo breaks and saying, look, if this Kumo break happens and it has conditions A, C, and D in place, this is where I'm suggesting it's going to go. It had no idea that the previous low, and it's not sitting there keeping this in mind and saying, look, I'm going to adjust my number to get it. It's just putting out raw data. And I love it when it puts out the raw data and the data matches up perfectly with a prior support or resistance level. In this case, it's exactly what we have. So I'm actually looking forward to seeing how this one will play itself out. It's looking pretty exciting. Okay, so that is the euro dollar on the 1 hour time frame there. Now I want to bump up to another time frame. And keep those. I'll get back to your question here, Greg, and just Bill Griggs in just a second. You as well, I apologize if I don't pronounce your name there. One other thing about the euro dollar that's interesting here is that after this massive sell-off, 3,800 down to sub 33, the paradigm very aggressive bounce, very aggressive bounce. Only 4 red candles, 3, 6, 9, 12, 15. So 4 red out of 15, basically 11 out of 15 were blue. Then all of a sudden it just stops. And what does it run into? Boom, the 4-hour Kumo wall. Instead of taking advantage of this Kumo window, and for those of you who remember from last week, a Kumo window is the weakest point inside the Kumo formation. And this would be the weakest because it's thinnest. Why is it the weakest? Well, it's support and resistance. So if the Kumo represents support and resistance, the thicker it is, the more powerful that support or resistance is. In this case, this is the weakest point in this little down move here. So instead of taking advantage of this here, it got rejected right in front of it and has been selling off since then, suggesting that it's going to have to really relate to this and deal with this. More than likely, the more it presses it, the greater the chances to perform another downward cross on this one here. Okay, so I just wanted to kind of point that one out there, that this thing actually, with such a strong move, it never took advantage of the Kumo window. To me, that is interesting. And then I want to zoom up to one more time frame. And that is the daily time frame on this one here. And exactly at the same point that it was running into the Kumo window on the 4-hour time frame was also the exact same point it was running into the Keygen here. Now, according to the display data box, the high on the price was 35.33. The ST, which is the Keygen line, was 35.41. So it basically got within 8 pips of the Keygen on a daily chart. That's virtually a touch. And then rejected off of that. That high at 35.33 is now 90 pips above current price action. So it basically, after 2 giant bullish candles, one of them being an outside reversal candle that closed at the high, then opened up and closed really high again, went straight up and bam, rejected right off of that there. So this is showing the power of the Keygen and how you can use it for great rejection plays. All of that was lining up together. So for those looking for rejection, a very nice little play right over there. Okay, 7:45. I have enough time to look at, and I'm going to let you guys vote which one we look at. Whatever gets the first one to get 3 votes wins. So we're either going to look at pound dollar, we'll look at Aussie yen, or we'll look at CAD yen. So I'll let you all vote and decide. Whichever one gets the first one to get 3 votes wins. Pound dollar, Aussie yen, and CAD yen. Those are the choices. We got 1 for each. 2 pound wins. Wow, that was fast. Okay, so let's look at pound. The good thing about this is that I actually have some Kumo analytics to share on pound. Okay. Pound dollar on. We're going to start with the daily. Okay. Okay. So this pound has bounced pretty strongly. In fact, if you read my last Ichimoku report, which I wasn't able to get to FX Street yesterday because I was working from my laptop remotely. But if you read it on my site there, I talked about how if you wanted to buy, your last chance to really buy this pair was right around here at the previous lows. Since then, it's bounced a couple hundred pips, actually 300. If this thing were to run into some resistance, besides the obvious previous top over here, is there another possible play on this one here? And there is. This is for bears here. If you're looking for another place to reject it, take a look at this right over here. We're kind of pushing up against the 50, which does have some play here and previous rapport with price action. But the 61.8 is just a hair's breadth below the Keygen. Keygen clocks in at 51.77. 61.8 clocks in at 51.58. It's about a 19 pip difference there. Remember, the Keygen represents trend line. So if this trend is going to hold, then the Keygen will likely contain it. And nicely enough, or tidily enough, that Keygen is very close to the 61.8 there. The other thing about the 61.8 is it's also this little previous high here and this little previous rejection low here. So if you want to be a bear, here is your nearest term level, according to Ichimoku and Fibonacci combination, communicating where your next possible place for a short would be. What level am I drawing for the fibs on the pound? I'm drawing it from this recent high here, which would be on 317, to the low, the swing low here on 325. So that would be the levels there. So you can just draw it from those candles there. Okay, great. So let's see here. Okay, I want to check in briefly with the 4 hour, and then I want to show you the Kumo analytics on this one here. Okay. You should see the new chart here. What is also interesting to note is that we have the potential for a Kumo break formation coming up here. And with that being said, we have to consider the fact that there might be a possible reversal. Now remember, this Kumo break also has some additional caveats to that. What are they? They are the fact that there's a flat top coming up, and we have what is called the two-step flat top. So here we are, we have this long flat top, but there's a step going into it. Anytime we have the two-step down flat top, what do we trade? We trade the second step. Because the chances are, if it does break through here, it will actually want to push back down to the second step before it continues and makes a full-on reversal. So this is a possible setup here coming up. Now, real briefly, I just want to chart where this second step is. This second step comes in at 50.90, below current price. Let's take a look at the Kumo analytics that I have on this one here. So I'm going to switch. No, this would be a reversal for the bull. So if you are looking to reverse, if it breaks above the Kumo, remember the Kumo is support and resistance, so if it breaks above the Kumo, then we've broken through support. And using it as a flat top, it will treat it as support for a launch there. No, you wouldn't short here. Again, if you break above the Kumo is a acts as support and resistance. If we're below the Kumo acts as resistance. If we break above the Kumo, then the Kumo now becomes support. And so that creates a Kumo break reversal, meaning that it could create a break to the upside. And that's a very good question. Let me finish the Kumo analytics here, Nakusi, and I will answer this question. Excellent. Excellent question there. The line here is 50.90. So that's it here. But just because this is the level doesn't mean we take the trade. We need the price action to break above it, close above it, and then come back and retest that. So the level is 5090. Okay, now let's take a look at the Kumo analytics. And okay, I'm gonna put a cam up here. Let me know when you see the Excel sheet. You're welcome, Bill. Okay. So on this particular pair, the Kumo analytics is saying with conditions B, D, and E in place, the average up break should move. Uh-oh. Something happened. That was weird. Okay, I just lost my thing there for a second. Something disappeared. Do you guys still see the Excel sheet there? Just want to make sure. That was trippy. Okay, great. I thought Hakam was doing a ghost thing on me again. So, okay, the average up break should move about 287 pips. So let's just round that to 287. Let's take a look at where this thing is saying it should go to. And let's turn off. I won't have time to do dollar Swiss actually. I apologize for that. I'd like to, but I just won't have time to do that. I still also got those other questions to answer. Okay, so 287 pips from 5090 would be about where would that be? Oops, sorry about that. Didn't mean to do that. Okay, 287 would be just shy of here. Just a few pips shy of that. And so that's where we'd be headed, which is this previous top and this previous bottom here, double bottom roll reversal level. So, again, the Kumo Analytics is pointing to a target that matches up very well with previous support and resistance levels. It's a very handsome little combination there. So basically to this most recent swing high that happened way back here on the 17th of March. So that's pretty much it. I want to thank you all very much for coming. If you have any questions, feel free to email me, info@secondskies.com. I hope to hear you on my site. And if you are thinking to take the course, make sure you click on that last link because there's a goodie in for people interested in the course there. Also the DVD as well, so make sure you check in with that. And I think it's official. I'll be teaching at the next ITC Traders Conference, so I hope to see you there. Other than that, I want to wish you all good luck trading. I bid you all adieu. Please stay tuned for our next speaker. And until then, I will see you next week. Take care, everyone.